Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video. I had intended to answer or reply to 10 of your questions and comments, but because of the quality and excellence of all your questions and comments, I couldn't decide upon 10, so I have raised that to 20. So I do have to get a move on unless this is going to be an ultra long answer and reply video. And I have left out quite a few questions and answers I did want to comment upon or answer. So if you have been left out in today's video, don't feel bad because you're one among many. Now let's go back to Joshua0689, who had something really nice. And I do like this particular comment in regards to what he has to say. So he started watching my videos to learn about investing, but I've got to say that your social commentary and philosophy is refreshing in a time when it seems like so many people seem to be actively hostile to facts and reality. I worry that we live in a world where objective, observable, testable scientific facts are becoming more and more controversial. No good can come of living in a fantasy world. Then he talks about Putin, and I have heard people say Putin is a fairly elected leader. I have heard people say that not that long ago. In fact, a colleague for work said this. In fact, he said also that Zelensky is a dictator. He hasn't had an election for 5 years, which is true, but the whole reason they haven't had elections is because they've been invaded by Russia and so many people have been displaced. So many Ukrainian people have been displaced. So this happens on occasion. And Putin, they did have an election in Russia, what was it, 2024, and he got 90% of the vote. Really? You got 90% of the vote? No. And what Joshua says here, over 20 years of very suspect 90% election victories while arresting and imprisoning his political opponents, passing all the authority and power of the Russian president to the prime minister, etc., etc. How can people be so cynical of their own politicians and then think it's not suspicious that any politician can be so popular? Absolutely right. There's no way. There is no way in history that any legitimate leader is going to get 90% of the vote. Absolutely zero chance that will ever happen. So yeah, he's not a fairly elected leader. I can say that with 100% certainty. And the other thing, the scary thing is I did hear someone who's been around Trump a long, long time say that Trump is an admirer of Putin. He admires what he's done over the last 20 years, the power he has gotten, and that I think that is a scary thing. And Trump, I think, is moving in that direction, authoritarian at the very least. People have raised the word fascist, and I wouldn't say Trump is at that point just yet, because there are some safeguards in regards to what he's trying to do, but he's trying to get around all those safeguards. And that is a scary thing right now in the United States, because they have been the world leader in democracy, and he's trying to get away from all that. So scary times we are living in, but yeah, Putin is a fairly elected leader. Oh my, if anyone said that to me with a serious look on their face, I would ask them to do research, just have a look at the facts, that sort of thing. The other thing this person said to me was like they love Putin, fairly elected leader. Zelensky is a dictator. And I said, where are you getting this information from? This could be just propaganda from Russia. And then he mentioned the word Tucker Carlson. I went, oh, geez, not Tucker Carlson, who got fired from Fox. I'm pretty sure he got fired from Fox because he's a ultra right wing nut job. So anyway, now back to the first bit. One of the problems I'll have with a lot of people is when they first read something or hear about something, that's it. They're going to believe that moving forward. You could say, no, that's wrong. But they'll say, no, I heard this or read this. So even though they might read or hear something that's completely wrong, they'll keep on believing it. And this is why a lot of people still believe in that vaccines cause autism, because they read it or heard about it 20 years ago. It's been debunked, but they still believe it. And I'm shocked so many people still believe that, even though that doctor, Andrew Watkins, I probably got the name wrong, he was actually paid a lot of money for that research, and this was money paid by someone who didn't believe in vaccines. So it was a fabricated study. And I think it's very important to be open-minded, to be extremely open-minded, not only as a human being, but also as an investor. We have to have that ability to change our mind over time, particularly when we get new facts. New facts are coming to us all the time. So we have to be willing to adjust to those new facts. And I would say the vast majority of people just can't do that. They steadfast to what they believe in, and that is it. And I feel sorry for those people, to be honest with you. So thank you for that comment, Joshua. Does need more thumbs up. Okay, next one I've got is from Black Top Images. Hi, Kneppy. I am trying to learn more about traders and the volumes they control. I keep hearing some technicals traders talk about price manipulation in order to grab liquidity before the stock heads north. I don't doubt it happens, but I'm not sure it happens as much as these commentators say it does. I personally feel like the argument is used to justify the randomness of the charts. What's your opinion? I definitely believe there is price manipulation. I was going to say mice manipulation, but that's just my, what's it called, spinnerism coming into effect. I do think price manipulation happens, but I also think the vast majority of situations, instances, is people just blaming price manipulation when something doesn't go their way. Always blame someone else other than your own decision making. It is rampant in the world. It's just better to blame other people. It's just much easier to blame other people than yourself. But I think it's very important that you make mistakes, and that's how you learn. That's how you become better. So I have no doubt there is price manipulation going. I'll try to find one instance, and you see it in the closing auction and the opening auctions all the time. Now, I don't have any instances offhand, but a lot of times when you have a look at the calls of sales, and in fact, it might happen. I need to open that up. No, here it is. If you have a look at the last trade in the closing auction, and a lot of times you'll see one share traded, and that is because there is manipulation going on the closing auction. And I've seen this with my own eyes. I actually bought some share in the closing auction not that long ago, and I just noticed that there was a little bit of manipulation, and someone made sure there was only one share traded in the very last trade. So unfortunately, that person bought one share. Now, not that person, but whoever had a bid in only bought one share because there was manipulation going on. So I see that all the time, but that's very small, very minuscule manipulation going on. Now, 10 years ago, I did get in trouble via ComSec because I was manipulating the share price in the closing auction. And again, I wasn't doing much. So I do think it happens. I've been blamed that I've been doing it. But I don't think it happens as much as what some people might say, because it's just something to blame. Something and someone to blame if something doesn't go their way. Okay, so so thank you for that. Black Top Images. Yeah, I don't think it. Yeah, I think it's. I'm not concerned about price manipulation at all. Put it that way. Next. Oh no. Next one is your Frenchman. I do have your Frenchman here, but I have to find it first. Here it is. Your Frenchman, a large mining company offloading to a small one is like king offloading a buffet scraps to beggars. It's treasure. And there was also a reply to this one as well from the Solar Aquarium. So true, once did a job for an ex-Rio Tinto gold mine in Australia. These guys could barely pay for lunch, let alone my fee. They are bottom dwellers and they know. The reason I like this is because I have, in the past, played this when a small miner buys or acquires like a small mine from a big mining company. So for a big mining company, that small mine is just nothing. It's absolutely nothing, doesn't do much for them. But for the small mining company, it's an absolute, it could be, if it's managed right, it can be an absolute company-changing acquisition. I'm pretty sure that's how Northern Star got started back in the early 2010s. I'm pretty sure they made a small acquisition and then they just kept building from that. And this has actually done fairly well for me over the past 10 years when I've actually acquired these small companies who have acquired these small mines, and they've just built the mining company from that. So it can be company changing when it happens. It doesn't always happen. I'm just saying it can be company changing. So always be on the lookout for these type. Well, I am always on the lookout for these acquisitions. Doesn't mean you have to be, but I am on the lookout for these type of acquisitions. So thank you for that. Your friend German. Okay, so 3 down, only 17 to go. And the next one is from Trader Hooper. You might want to check out the Kaiser announcement today, which I completely missed. Which, it's not a bad thing. I miss most announcements every day. There's how many? At least 50 to 100 price-sensitive announcements every single day. So I'm going to miss some. That acquisition from a larger company, CYL makes KAU a gold producer. I don't own or follow either company, so I'm going to go through the details myself. KAU dropped nearly 6% today, but that is probably due to the capital raising they are doing to raise funds for the acquisition. So this could be one of those acquisitions that I might actually like. And sometimes they do have to do capital raisings, and that is a time to buy. A lot of times that is a time to buy. So I don't know anything about this particular acquisition because this is the first time I have looked at it. And there you go. Transformational acquisition of the Henty gold mine. And this is coming, they're buying this from Catalyst. So Kaiser has a markup of 42 million and Catalyst has a markup of, I'd say, it's pretty big. Yeah, 1.245 billion. So this is another case where a big gold mining company is selling something small to something to a much smaller mining company. And Kaiser is calling this transformational, which it could be. Doesn't mean it will be, but it could be. Now, the one things I do look at when it comes to these acquisitions is how close is it to be in production. That is important to me. I don't want like a project that's going to take 5 to 10 years to go into production. So I'm looking for a mine that's already been in production, that all needs a little bit of love and affection, and it can get back into production, and then it can be a producing mine for 10, 20 years, something like that. So this is actually from Catalyst, and it'll tell us what they have to pay. So Henty Gold Mine in Tasmania. So Catalyst will receive $15 million upfront cash consideration, $4 million to be reimbursed from environmental bonding payments, $40 million in deferred gold consideration, $40 million via an ongoing equity interest. So that will be, so Catalyst will own a part of Kaiser. I don't mind that either. An option to acquire 50% interest in a Victorian processing plant situated 100 kilometres from Catalyst's 26 gold ton gold resource at the Four Eagles Gold Project. The reasoning behind the transaction for Catalyst is threefold. It free up management time to focus on plutonic in West Australia. Okay. It backs the new management team at Henty, who should be better able to dedicate the time required to realise Henty's upside. And yes, that is a really good reason to offload some of these things. You're a big gold company, you have all these assets, and give this asset to someone who will give it the love and affection it might need. And they've talked about this straight away. The reason they're doing this is because of that very reason. To cause a processing solution in the future for Catalyst Four Eagles Gold Project in Victoria in order to create value for our shareholders in an asset that was not being valued by the broader market. Okay, so this is definitely something I'm going to have a closer look. It's probably not a good time to do it in this particular video because I could spend a fair bit of time on this. So that's via the Catalyst perspective. Now, Kaiser also has released an investor presentation, transformational acquisition also. So 2 little documents here. I sometimes would tend to focus on the presentation. I know, because I'm just being a bit lazy. That's just what I do. It's a presentation, just a marketing tool, and they're pretty. Yeah, they're nice, pretty. So I might go through this and have a quick look at it. If we have a look at Kaiser's chart, Kaiser Reef. I went to a place in the United States, a national park called Capitol Reef. I don't know anything about reefs. Well, I do know there's reefs like the Great Barrier Reef, but something to do with, I forget now. Yeah, so something geological, but I can't remember what exactly it is. But anyway, Kaiser Reef, this is the chart at the moment. This could be the, this could be it for Kaiser Reef. If the market likes this, and let's have a look at the trading in Kaiser Reef lately. So share price did go down, but it hasn't really shifted all that much. So this is something that I'm really keen on. I'm going to have a much closer look at Kaiser Reef and this particular acquisition because this is the sort of thing I'm looking for, and sometimes I miss it. So thank you for that, Trader Hooper, because I know I now know it. Okay, VBED66, who has VB in his profile picture. The female Helia director who's been selling her shares over the last few weeks should be investigated for insider trading. So, yeah, this would be a bad look if this is what she's been doing. I'm not saying she hasn't been doing this. Now, share price did go up 3.3%, after going down 25.6% on the 24th. Share price has rallied a little bit since then. Wasn't there something, someone came out favourable, but yeah, I'll looking at that, I don't. They went ex-dividend. That must have been on the 19th, and they announced that CBA, they've lost that CBA contract or whatever it is. That's why the share price plunged, which was always going to be a possibility. Now I'm just going to have a look at some of, is this Joanne Stevens or Pauline Blight Johnston? There's a lot of these Appendix 3Ys from Pauline Blight Johnson. What I could do with this sort of thing is just have a look at market index. And they usually have insider trading down the bottom. Director. So we're talking about Miss Pauline Blight Johnson, or maybe it's Stevenson. So that's the CEO and Managing Director and the non-executive director. Pauline Blight Johnson's been in that role for 5 years. There you go. And here we go. Here we have the insider transactions. And yeah, Miss Pauline Blight Johnson has been offloading quite a few shares in August. Not August. What month are we in? March. Yes, this is a lot of shares. She's just been offloading on how many times? At 7 instances, she's offloaded some shares. She's exercised something. She's been issued something. So that could be one of the reasons why. But she's definitely offloaded way more than she's been issued. And then Miss Joanne Marie Stevenson bought some shares on the 21st, so just before the share price dropped. And Pauline Blight Johnson has been selling shares between $6 and $5.70. And if we have a look at the chart for Helia, so between $6 and $5.70, so near the top. She's been offloading a lot of shares near the top. So I am not going to say anything negative here. It's not up to me to decide what should and should not be allowed. Well, we know what should not be allowed. She obviously, you could say she's a good trader, but yeah, I'm not sure if I agree with what she's done. And definitely, she should be investigated for insider trading. I actually do agree with that. Now, maybe nothing will be found of that, but this is sort of thing that I think someone should be investigated. When you continue selling shares in a month, 8 times within 1 month, when the share price reached a high. Now, there could be reasons behind it. I don't know, but that's the whole point of investigation. They might not find anything, but yeah, that does look a little bit dodgy. So thank you for that VBED66. Thank you very much for that. Next on the list is John. Oh, I did miss one, by the way. Sensei6011 did ask me a question about ETFs, and I forgot to. What I can do, I'll go back to this later. So Sensei6011 did ask me about ETFs, and it's a relevant question. Okay, so let's go back to John C. John C. JJ77. Hi, Kneppy. Where do you think EZZ is heading? The company has very low debt and good performance during financial year 24. Not sure why the prices are dropping over the last few weeks. Okay, so let's talk about EZZ. I looked at this chart yesterday. So I'd go through a lot of charts during the weekend. Well, it starts Friday night. And the first thing I thought about this chart is, I wonder what the market sees in EZZ that I don't. And what they see is something really negative. The share price keeps on dropping, reached a high of $5 back in October. Share price has dropped from $5 to $1.55. The P ratio must be like 7 now. P ratio 7.3, dividend yield is 2.33%. Market cap is $70.76 million. The company also has $25 million of cash. So that means the enterprise value is like $50 million. So the market is expecting something really bad to happen to this company. If it doesn't, if that bad thing doesn't happen, this is a perfect opportunity to buy this company at a cheap price. They are starting to expand overseas. So my one gripe against this company was they're too focused on China, too reliant on China, maybe is the best word. The margins are really good, gross margins are really good. So you could also argue, because of the really high gross margins, that there is going to be eventually some competitive pressure. Now, possibly, on the other side of that coin, is they are building a brand. And if they do build that brand, they could maintain those gross margins moving forward. So they do spend a lot of money on marketing and advertising, and that does have to pay off. So I have no complaints with where they are right now. It's just a chart and the sell-off. So that is just the one concerning thing for me. It's also, well, I sold some shares. I originally sold some shares of VZZ up back in September, and I've been thinking of buying some more shares. I've been thinking about adding to my position, uh, but I'm just concerned about this chart and what is the market seeing that I'm not. Let's have a look. Actually, we'll have a look. EZZ in FinChat. In fact, do have a question about FinChat from someone. Who asked me about FinChat? I forget. Oh, it could have been. Yeah, it was just James Dean in regards to IPH. So when you do look at in this sort of platform, I do on occasion look at the numbers with a grain of salt, because on occasion I will see one platform have completely different numbers than another platform. And I'm always thinking, why is that? For instance, sometimes you'll see a P ratio of a company completely different, or the amount of shares of a company completely different on one platform. Now, TradingView said the P ratio was 7.5 or whatever it was. FinChat says its P ratio is 7.7. Price to book's 3.1. EV to sales 0.7. EV to EBITDA 3.9. Price to free cash flow 9. Gross margins are 78.6, and that is really attractive to me. Return equity is 26.6. Return invested capital 152. So really nice returns of equity and invested capital there. Nice growth in revenue. Over the last 5 years, revenue has grown at 42.8. I wouldn't consider this company to be high quality just yet, but enterprise value, yeah, about $50 million. So with the profit the company produced in the last year, in fact, the last 12 months, we're talking about net income of $9 million. The company is trading in the last 12 months. That means the company is trading on 5 times EV, not much. So obviously the market is discounting this company for some reason, and I just don't know why. Now, the market can be completely wrong, and this could be a great buying opportunity for this company. So it could be. Yeah, so that's all I've got to say about EZZ. I have no problems with the company itself. It's just, what is the market thinking? What is the market seeing that I'm not seeing just yet? Now, I could be overthinking it, and maybe there's nothing there. Maybe it's just negative sentiment driving the share price down. Probably that's the other thing. All it could be is just negative sentiment. And sometimes the market overreacts on the downside just like it does on the upside. And that's when you do seek buying opportunity. So I'm not sure, John CJJ. I don't see anything negative with EZZ just yet. Okay, the next one we're going to be looking at is CJ Smythe. Okay, so CJ Smythe mentioned sold out of Synlait yesterday with 90% profit. So I have as well, because it hit my sell price. That's it. Hit my sell price, and I didn't like how the share price was trading. So we'll have a look at the chart in Synlait. And CJ sold out of Synlait, 90% profit, liked the video on Trendkillers. Was very insightful. And ever since I did that video, I've started to see more and more Trendkillers. And I mentioned one yesterday. Zip had a perfect Trendkiller chart. But let's go to Synlait Milk. So all it took Synlait Milk for the sentiment to shift, all it took was a little bit of negative commentary about the outlook. That's all it took. A little bit of negative commentary about the outlook, because the results actually beat expectations. So if the market was just looking at their results compared to expectations, probably the share price would have went up. But just a little bit of negative commentary in their outlook meant the share price did come down a fair bit. So it did go through my sell price, and I did take profits on that day. So very happy with that trade, I'll be honest with you. So I bought at 44 cents on the 24th of January. So we're talking about 2 months ago. And I didn't have a 90% profit, unlike CJ Smythe, but it was a pretty good profit. We're talking about at least about 60 to 7% profit, which I'm going to take over a 2-month period. And the other thing is, I just don't know which way the market's going to go here with Synlait Milk. I wouldn't be surprised to see the share price going forward from here. So all the bad news has been priced in. That bad outlook has been priced in. The share price starts to rally, because I think there is a good outlook for milk in New Zealand. But who knows? Maybe the share price will keep on dropping. And that's why I took profits, because I'm not sure which way the market is going to go from here. And that's the way I do things. If I'm a little bit more unsure, I will sell out of my position. So that's Synlait milk. And Trendkillers, yeah. One of the reasons why I want to talk about this is Trendkillers. I saw 2 yesterday when I was going through some charts. Yeah, Zip was a perfect one, a beautiful one. Not a perfect trend killer, but share price wasn't really trending down. In fact, it was still in an uptrend until the company released something on the 30th of January, and that was a beautiful, perfect trend killer. Share price dropped. Share price kept on dropping. We saw the share price bounce, and that would have been people who thought, "Oh, share price has dropped a fair bit. Now's the time to buy." But because of the trend killer, we had a moving average crossover. That was not the time to buy, and we have seen share price just plummet since then. Now I'm trying to think the other one. More than likely, won't be able to think of it on the spot. I wrote a lot down. Yeah, I wrote quite a few ticket codes down, but I don't think any of these were trend killers. Anyway, so trend killers is something I'm now starting to see a lot. In fact, I've started a trend killer watch list. Here it is, trend killer watch list with a fair few in it, and Zip wasn't in it, so I'm going to put Zip in it. And I should have put the other company in it, but I didn't. Anyway, so let's move on to the next question. Thank you for that, CJ Smythe. We move on to the next question, which is from Mom, IGITMD. Here it is. Mom, IGITMO. Something really weird happened with ANZ today. Price just dropped at 2 p.m. with no reason. Drove a sell-off in other banks. I would not have known this. So this happened a few days ago. So let's have a look at ANZ chart. And what we'll do is we'll have a look at the 5-minute chart, see if we can hone in on what happened. Sometimes there's no reason behind this. And there it is. Yes, we can see it right here. We can see a pretty big drop at about 1. In fact, it happened right on 1 p.m. So this will be 2 p.m. those with daylight saving time in the East Coast, because this is Brisbane time, because I'm in Brisbane. So even though it says 1 p.m. in TradingView, that's my time. And there was a pretty distinct sell-off in ANZ at that point in time. What happened at 2 p.m. on Tuesday? I have no idea. I didn't hear any news about this. And then we noticed the share price rally after that, after about 1 hour later. Share price, is that 1 hour later? Oh, no, that's about 2 hours later. Share price then rallied. Don't know why. Did they release anything? Let's have a look if they released anything. I doubt it. It would have been good if ANZ had got a price query from the ASX. No, nothing. All this could be is just like a fund manager selling, just dumping on market, selling. We saw a massive increase in volume. That's the other thing. Look at that massive increase in volume. Sometimes when you see this really big volume, that could be the end of the selling, but we saw selling continue after that. It could just be a little bit of trading going on. People saw the share price drop and they panicked and sold out. So the share price dropped from 29.70 down to 28.60. Doesn't seem a lot, but that is a lot for a fairly short period of time. So thank you for that, Mom IGITMO. Yeah, no idea. That is really weird. And that happened on Tuesday, and I didn't hear anything about it. I heard nothing about it. So what could it be? Fund managers selling. The very fact it happened at 1 p.m. tells me, or 2 p.m., tells me usually macroeconomic news is released at 2 p.m. or on the hour. So 12, 11:30, sometimes like on the half hour, 11:30, 11, 12, 1 or 2. So I'm wondering if there was a bit of economic news released on Tuesday on that day. That did affect ANZ's share price, did affect the other banks. Let's have a look. And the answer to that is no. It only affected, based off this, it really only affected, significantly affected ANZ. And then, funny enough, well, now that's the next day. So it really only affected ANZ. Now, this is just based off 2 samples. So let's have a look at the third one. Westpac. Sorry, NAB. I might be leaving you out. And I mean, there was a little bit of selling with Westpac, but it happened at about The selling happened 15 minutes after ANZ. So this seems like ANZ unique, if that's a good way to say it. This only happened to ANZ, so doesn't really fit with the macroeconomic thought line of thought I was going down. So something happened to ANZ. I would say maybe fund manager getting out, just unloading, selling on market. I have no idea. Other than that. But thank you, Mom IGITMO. Rick Fillion has actually pretty good thought here. So Saferoads was my stock of the day on the 25th. A really small company, very little trading in this company. And they sold part of their business for, what was it, $8 million? And the overall company was valued at like $4 million, $5 million. And Rick Fillion said, wouldn't the company that bought the part of Saferoads would have been better doing a takeover bid of the company than pay over $10 million on a $4 million company? And I was thinking, yes, it actually does make sense. Just buy the whole company. Just don't buy the company, the part you want. Buy the whole company. Well, who knows what the management were going on? There could have been, maybe they were just selling that part of the business and that's it. So they weren't willing to take offers for the whole company. So there could have been a lot of things limiting the person or the company that was taking over this part of Saferoads business. So that's probably what happened. But it does raise an interesting point that why not just or try to buy the whole company? And by the way, Saferoads, yeah, very liquidly traded. So I actually didn't realize it was so liquidly traded. We did see a little bit of improving liquidity on that day. But yeah, I have no interest in Saferoads. But it is a good question. It's a really good question from Rick Fillion. Why not just buy the whole company? Dev Shaw. Okay, so if people were shorting just ahead of, this is in regards to Opthea, and it does look like there were people shorting it and selling it, Opthea, before they released the phase 3 trial and results. If people were shorting just ahead of phase 3 trial announcements, could this be insider trading? Could be, or maybe people just taking a bet. It could be, another thing it could be is maybe there were people who were long Opthea who were then going short just to hedge their bets. I don't know. It doesn't necessarily mean there was insider trading. Does it justify an investigation? I don't know. I don't know how ASIC works, but who knows? People within the company already knew that they won't make it, possibly. I actually did read a really good article. Was it Phrases? Michael Phrases. I'm just guessing now. Opthea. I think I might have. This was an email I did receive because I must have subscribed to their emails. And they actually did write about Opthea in one of their emails, and they actually did research on the company, and they didn't like some things about how they were showing their results or something. I forget exactly what they were saying. I didn't focus too much on the article or why. They actually even met with management, but they just didn't like something they saw in their results or how they present the results. So that's also could be at play here. Maybe there were some people like that who were aggressively shorting Opthea because they thought, based off previous results, they thought there was a better chance that the phase 3 trial would be not successful. So there's also that possibility as well. So there's a chance there was no insider trading at all. If there was, this is a serious issue, which is absolutely right. Insider trading definitely should not be allowed. There's a reason why it's against the law to do that. It's a reason why if you are do any sort of insider trading, you're put in prison. You have to be put in prison. Absolutely. Do I think there's more insider trading than I think there's way more insider trading going on than we probably expect. But I think it is an issue. In fact, when I started reading about technical analysis, they would state that when you start to see volume increasing or share price pop up or down just before an important announcement, that's insider trading. And this is maybe 10 years ago, and I have read this other times since then. So these technical analysis experts just implying that this happens all the time. So I'm not sure about that, but they're saying if you just have a look at trading in the company before they release some news, that you do see insider trading hints. So I'm not sure if that's absolutely true, but anyway, needs to be investigated by ASIC. Well, yeah, I don't know what they need to see before they start investigating, but in my opinion, there should be more investigating by ASIC if they have the means. That's the other thing, if they have the means. I'm not sure how much means they have. Looks like Clarity Pharmaceuticals is also getting short in the last few days while they also await their FDA approval for prostate cancer in around April sometime. Could this be of a concern as well? It could be. And the chart is pretty bad for Clarity as well. So this is Shortman. If you don't know anything about this, this is just the top short stocks on the ASX. You can look at this by company as well. And you can just see the massive increase in shorts of Opthea. There it is. It just exploded from the 4th or the 7th of February. It's just exploded. It went from about 1% to 4.5%, which doesn't seem a lot, but that's a fair bit. So an absolute explosion in shorting in the last month and a half. And Clarity Pharmaceuticals, yeah, definitely shorting has increased significantly for Clarity as well. Now, the other thing I'd probably say is the chance of successes when it comes to phase 3 trials and that sort of thing is probably low. And I think a lot of fund managers, particularly long fund managers, or maybe just short fund managers, probably have done a lot of research. The probability of success that Opthea had might have been really low. And that's what they were playing at. So the chances of success were pretty low. So it's actually a good risk reward. If we take on this risk, sure, the share price might go up if phase 3 trials are successful, but if they're not successful, share price might plunge. It might drop significantly, and that's what you do see. And sometimes the share price has more chance of dropping significantly than rising. Even if the share price rises, it may not be significantly. So that's the way I think some of them play it, because they know the success in phase 3 trials probably is fairly low. Anyway, so thank you for that, Dev Shaw. Next one we've got is from, not that one. Oh, Gem Knock. I never thought I'd hear this being mentioned, or someone just saying that I inspired them to do finance. Well, because you're at uni, I'm assuming you're fairly young, 18, 19, 20, and you've got your whole life ahead of yourself. Now, I'll be honest with you. So I did economics in university, my first stint at university. When I graduated, I worked for the Commonwealth Bank, and I was going through the, what was it called? The Financial Institute. I think it was Securities Institute or something like that. So I was on the path to becoming, I don't know what exactly, but I was learning all about the stock market, financial planning, all that sort of thing. And then I decided to just go overseas for a year on the intention of coming back and finishing all that. And I just didn't come back. Instead, I went into meteorology. So finance at uni was definitely economics, not exactly finance, but I was heading down this path in, I suppose, postgraduate education. And I was definitely on that path. And it would be interesting if I had it again, would I keep on going down that path? I don't know, because I like where I am right now. I will not change anything at all, because you just don't know. Who knows? If I went down this path, I could be hit the bus the next day. Who knows? I could be dead, or I could be, the richest person in the world. You just don't know. Anyway, so it's really good to see that at least I've inspired one person to study finance at uni. And if you become the richest person in the world, Gemnock, then I do expect a 10% finder's fee, if that's a real thing. Anyway. Ben Hutchison, yes. I had to mention this. Daily, because I've mentioned that I am thinking of maybe shortening my daily rundown videos to like 30 minutes. And the last 3 times I did it, I think it was 30 to 35 minutes. And I think that's a good time. And that way I can actually record other videos as well. So I love to hear other people's thoughts on this. Daily rundown videos are quite popular. The very fact that I'll show you, I've done 2 reaction to articles. And I'll open up my content. Yeah, so I've done 2 reactions. One was the 9 ASX stocks the pros are eyeing off. And these are fairly, very popular. I was shocked how popular these are. The other one was, where was it? 3 super ASX stocks to buy via the Motley Fool. Yeah, these are probably my most popular videos, funny enough. And because you like, and also I did get quite a few comments in regards to those videos. People would like me to do more of them. So moving forward, I might do more of those reaction videos just because you tend to like them as a whole. But I still want to do these daily rundown videos because it doesn't take much of my time to do these videos. They are popular. Doesn't take me much time. In fact, all I have to do is just hit record button when I start, hit the end record button when I finish. No editing at all. It's just straight through those reaction videos. The last one I did was straight through. Didn't have to stop that at all. But sometimes I do have to stop them. I might make a really small mistake or something, and I will stop it. But daily rundown videos, I do like doing those. And those reaction videos, shocked at how popular they are. So I will do more of those too. Just James Dean is talking about Lovisa. I was thinking about leaving this to my technical update video tomorrow because I was thinking about showing some of these companies, which include Lovisa. It also includes Cochlear, James Hardie, CSL, WiseTech, NextDC, and a few other companies as well. And Lovisa was a part of this. So one of the things I do is I have, in my watch list, I have a high quality, ASX high quality. There's 36 companies currently in this. It's not complete. I still adding to it. And Lovisa, and what I do is I go to, say, James Hardie, which is for some reason at the top of this list. And what I do is I go to the weekly chart and I have a look at the 200-week moving average. That's it. And I just have a look at the long-term chart. And so this is James Hardie. I suppose there could be a good debate whether this is a high-quality company or not. And for my purposes, for the purposes of this video, I'm not going to debate that. But if you have a look at the chart over the last 14 years, this has the characteristics, just the chart, characteristics of a high-quality company. And right now, the share price of Lovisa, maybe I should make this line black to make it easier seen. Let's do that. Style, black. Anyhow, so the share price, and the reason I do this is quite a few months ago, I read that Charlie Munger stated that if all you did, if your investing strategy was just to buy high quality companies, when it gets down to or below or around the 200-week moving average, you will significantly beat the overall market. And I was thinking about that and I went, that's actually a pretty good idea. And then I didn't back test it, but I just went back through history and I've already done that. In fact, a lot of the companies I own, American companies I own, I bought in 2022, I sort of did that unconsciously, subconsciously. Share price had pulled back significantly and I bought all those companies when they were near the 200-week moving average. So I'm paying more attention to this now. And James Hardie has fallen through the 200-week moving average like butter. It's sliced through it like nothing else. That's the one concern, how far it's fallen fairly quickly. But you can see whenever you buy James Hardie, when it goes below the 200-week moving average, you've done fairly well. So you just don't know where, yeah. So, but on occasion, it does stay below the 200-week moving average for a while. So back in 2022, it stayed below for like a year. Now, that's a year period. So this could be the start of another year where it's below it. Anyway, so Lovisa, that's the whole point of me doing this particular part of the video. Lovisa, I had a look at Lovisa because it's in this list as well. In fact, it's down the bottom. So Lovisa listed back in 2015. So 200-week moving average for Lovisa only started in 2018. So it has to be listed for at least 3 years, preferably 5 years, before you have a 200-week moving average. But this is also the characteristics of a high-quality company. In fact, twice, the last 2 times Lovisa got near the 200-week moving average, it bounced off it like nothing else. That was back in June 2022 and also back in November 2023, not that long ago. 2 beautiful bounces off it, and previously to that, it went below the 200-week moving average during COVID-19. And it didn't take long before it went above it. And look where it is right now. It's right on the 200-week moving average at $24. So the question you have to ask yourself, is Lovisa a high-quality company? Now, I do own Lovisa for the long term. I do consider this company high quality. There's a lot of reasons behind that. Well, many reasons. For instance, if we go to have a look at the company itself and some of its metrics, it has a lot what I'd like to see. Where is it? Overview. So when I talk about quality, I don't look at valuation. It's just about quality, and then I go to valuation. So ROE 79.8, gross margins 81.9% for Lovisa. Now there was a bear case in regards to margins that the competition would see Lovisa's gross margins go, "Oh, I want part of that pie or a piece of that pie." So are they able to maintain those sort of gross margins? And I think this is the moat that Lovisa has, that they are so efficient when they have a store. So gross margins at 81.9. The other thing I like to do with gross margins is have a look at the history. So this is just one here. Now, if you have a look at the return on equity, 79.8%, return on invested capital, 17%. That's a 5-year average. Also, I'd like to look at how that is trending. And the other thing I like to look at when it comes to quality is just growth. So revenue growth, 20% per year. That's over the last 3-5 years. Earnings per share, it's nice and high. Even dividend growth is about 20% per year. A dividend yield is 3.4%, not bad. So if this company keeps on growing, and if you buy shares in this company right now, your dividend yield is 3.4%, which is probably the same as CBA, but which one's going to be significantly bigger in 10 years' time? It won't be CBA. It's more likely going to be Lovisa. And because this company is growing, that dividend yield on your initial capital is going to be growing as well. So if you bought $10,000 right now in Lovisa, and the dividend yield is 3.4%, that's, what's that, $340. Who knows, the dividend could quadruple in the next 10 years. So instead of $340, it could be well over $1,000, it could be approaching $2,000 of dividends based off your initial capital, but also you get capital growth. So that's the great thing about growth companies, that not only, not only do you get really good capital growth, you can see really good dividend growth as well, and that's so attractive. And I talked about that in a video that will release in the next few days. It returns to why I consider growth to be really important. So Lovisa, based off what we see here, is good quality, high quality. Also like their rollout plans around the world. This is a global company. They're rolling out. Now, times are a little bit tougher now, but how successful will they be by rolling out? And I think they can be fairly successful. P ratio is 32.2. So based off history, that's not that high. And what's the other thing I was going to look at? Oh, gross margins. Yeah, gross margins. So this is something I like to look at. How are gross margins trending? And if we see gross margins starting to drop, that would be a concerning sign, but they're not. So yeah, that would be the next thing I want to see, is gross margins at least remaining stable. Anyway, so thank you for that, Just James Dean. And you're absolutely right. Share price of Lovisa is at a really nice buy price compared to the 200-week moving average. So could be good time to buy Lovisa. Okay, next on the list we have, no, not Just James Dean, Sham G33. And I must have missed another one. Oh, dear me. I keep reminding myself to like these or love these, so I don't. That's how I'm bringing these up, but I forgot to do two. But I can go to these in a second. Okay. Sanka 5228. There we go. Okay, Sanka 5228. Hi, Kneppy. Thank you for the great uploads. What do you think about RLF? They made a few positive announcements recently, and their operating cash flow is positive as well. There you go. RLF. What is it? RLF. Is this real ag? Something ag. Something to do with ag. RLF AgTech. That's it. And if I remember correctly, I do have this company on my December quarter Appendix 4C and 5B watch list, not watch list, to-do list. And I was supposed to go through all these companies. I've gone through like one. And I'm pretty sure RLF is on this list. Let me just confirm. Well, I can't see it because no, it is. They released their Appendix 4C on the 20th of January, and it's right next to Pointera and Biome. So RLF is a company I'm supposed to have done research, and the reason it's on my to-do list is because they would have been operating cash flow positive. That is the main reason a company gets put onto my to-do list. So let's go back to their most recent Appendix 4C. They released on the 20th of January. And this one might surprise. I don't know what they do. That's the whole reason I'm researching or want to do research. So obviously they have something to do with agriculture and tech, but what exactly? Okay. They reduced debt. Looks like they did a capital raising. Something about China. There's a chance I might have researched this company in the past and I've just forgotten it. What you can always do is have a look at their About section. Here it is. Australian-based global plant nutrition company with a vision to empower farmers, nourish people, and restore the earth. Yes, I've done research on this company before because I remember that. Combines plant science with advanced chemistry and manufacturing practices to produce high-quality plant nutrition products for commercial agriculture. Yes, I've done a small amount of research on this. Operating in Asia since 2006 with long-established manufacturing, sales, and distribution facilities. Okay, so let's have a look at their cash flow. So receipts, 9.653 million. So it's not a small company, is it? It's a fair bit of receipts in one quarter. And now operating cash flow positive by over $2 million. Now, even if you take away the government grants and tax incentives, they're still operating cash flow positive by 1.6 million. Now, there might be a bit of seasonality when it comes to this company. I don't know. I'd like to have a look at the history, financial or the cash flow history, just to see if this goes up and down like a yo-yo. I did have, I'll see if it's open up now. I did have up my Excel spreadsheet. Here it is, it's open. That's fortuitous. That's right, I was looking at one company called LVE, which is Love Group. I don't know why I would want to do research on that company. Definitely not. And of course, my system's going slow. So let's have a look at RLF. In fact, I've actually had a look at this company because I've got, here it is. I've got it right here. I must have talked about this company. So this is their receipts history. And there is definitely a little bit of seasonality. And the reason I say that is you can see the receipts going up and down, up and down, up and down. So this could be the good quarter, and maybe the next quarter we'll see receipts going down. And if you go back to the last two Januaries, yeah, January receipts were high, and then April receipts, so December quarter receipts high, and the March quarter receipts down. So I would expect receipts for RLF to drop $3,000 in the next quarter, maybe even more than that. So be aware of seasonality when it comes to these type of companies. But they were and are operating cash flow positive for not only the quarter, but also for the half year. So this company is definitely on the right track. I'd like to have a little bit more research on the company, which I should have done by now, except I'm being a little bit lazy. And let's have a look at the chart. Now the chart, and we'll go back to daily chart. And we'll go back to 25 and 100-day moving average. And ooh, there are things to like about this. Okay, so the first thing that really grabbed me was the volume. That's the first thing that really grabbed me was we started to see increasing volume in June of last year. That was sort of the signs that the bottom was nearing. So we saw a little bit more selling, not selling, it's a little bit more buying coming, a little bit more interest. And the share price still dropped after that, but that was the first good sign. And then we saw an explosion in volume from the 16th of January. So just before they released their quarterly, and then they released their quarterly on the 20th, and then the 21st, the share price jumped up 25.7%. They might have released their quarterly after the market had finished. No, they released at 9:16 a.m. So there wasn't much reaction on the day. And let's confirm that. Trade history, 20th. Oh, there was a little bit of reaction, but not much. There was a bigger reaction in terms of price increase the next day. But the volume was the two previous trading days, which was really interesting. So you can just see the share price at that point was 3.5 cents. Share price hasn't quite doubled, but if we go back to the chart, we've had a moving average crossover, and the volume has remained quite healthy. This is a beautiful looking chart. So this is definitely a company I should be paying a little bit more attention to. So RLF, thank you for that. Sanka 5228. I think that was Sanka 5228. Thank you, Sanka 5228. Motivational Flavio, best of breed in his opinion, or her. Don't want to be sexist here. Maybe not sexist, but just assume. What is it? 90% of people who watch my videos are male or men. I don't know which one's best. And 10% is women or females. I'm just making a wise assumption that you're all men, which is not a good assumption to make, because there are women who will reply, and I don't want to call everyone men because not everyone is men. Anyway, Motivational Flavio says, best of breed in my opinion, Technology One, Zero, Pro Medicus, and REA Group. I can't fight. I can't push back on that because I own all four. If I had to rank all four of those companies in order, I don't know if I probably put Zero last. I'd probably put Pro Medicus at the top. And then REA Group. Oh, I don't know. That's hard. Geez. Definitely Zero last because it hasn't got the history of profitability just yet. Pro Medicus, just because of valuation, could be considered not near the top. Technology One has more of a history. REA Group has a lot of upside. Well, they all have a lot of upside. I don't know if I could rank all four. This is why you can buy shares in all four. Win, win, win. And that's exactly what I've done. I will say that I have taken profits in Pro Medicus and Technology One. So my holdings of both of those companies have actually decreased. And if I see share price of both of these companies fall back a significant amount, I will buy more shares. And I do like that strategy. You don't have to sell all your shares in the company if you think they're overvalued. Just sell out a little bit. And then if they become good value, buy some more shares. Anyway, plus a nibble on Objective and Superloop. And Supply Network, will it ever go down? Waiting patiently. That's me with Supply Network over a long period of time. And then I just bit the bullet and took a position at $30. I went, I'll just buy some shares at $30. And then the share price actually pulled back to $29 just after I bought. I think I bought, if I bought at 30 and I bought at 30, because it was exactly the round number. So somewhere in here, back in October, November, and the share price has increased 20% since then. And if you have a look at the chart over the past few years, it's a beautiful uptrend. On occasion, you see there's little dips, but the little dips aren't that significant. And even with the overall weakness in the market, we haven't seen a significant dip with Supply Network. What can you say? It's not the most exciting company, what they do, but it's working. Management must be really good. And if you have a look at some of their metrics, I would put Supply Network near or definitely in the high quality spectrum. I think you have to. So gross margin is 43.6, which is pretty good for this type of company. Return on equity 35.1%, return on invested capital 22.6%. Look at the revenue growth, really nice revenue growth that has been accelerating over the last few years. So the last 10 years, 14.7%, but over the last 3 years, 22.1%. And look at the earnings per share growth. Over the last 10 years, 18%. Over the last 3 years, 28%. So that in fact, the company is actually growing at a faster rate. And even the dividend growth, 39.4% growth over the last 3 years. Dividend yield 1.9%, but with that sort of dividend growth, the dividend yield on initial capital could be 10% within 3 years or so. Maybe not 3 years, maybe a little bit more than that. So everything I see here is qualities or the characteristics of a high quality company. It's just the valuation, P ratio is 42.6. But I think what the market is seeing here is the characteristics of a high quality company. And that's why the share price has been in view for uptrend. But I think eventually the good times will come to an end. And I wouldn't be surprised to see the share price pull back a fair bit because P ratio of 20, 21, I think is reasonable. And that means the share price could halve. And if that happens, I will add to my position. I will. So thank you for that. Will it ever go down? It eventually will, but you just don't know how long it's going to take. Just James Dean. Noob question. IPH, underlying earnings per share in the annual reports shows growth far more than FinChat. Is FinChat using stat numbers? So let's have a look. So when I did a bit of research on IPH, the one thing I did not like was the lack of earnings per share growth. So revenue growth was nice, but earnings per share growth was really low. So 3 years, 8.2%, 5 years, 1.7%, and 10 years, 4.5%. So that's the only negative thing I found with this company. Share price has dropped a lot. And this is really important because P ratio is 15.5. And if I saw really good earnings per share growth, I would say, what is the market seeing here with IPH? Now, I mostly say that the market is smarter than I am. So it's a good assumption to make, but it's not always true. So I could be missing something when it comes to IPH. But the only thing that really turned me off was the lack of earnings per share growth compared to revenue growth. So there is a possibility that FinChat is wrong, because I've seen it on occasion. FinChat is wrong. This happened to me just the other day. Oh, how they calculated free cash flow. They did not include, what company was it for? They just included capital expenditure, but not intangibles. What do they call it? It was sort of like capital expenditure for research and development, something like that. And FinChat did not include that in calculating free cash flow, which I do think is a mistake. That's just my opinion. Anyway, so let's have a look. This is diluted earnings per share. So let's have a look at maybe IPH. Now, the company's annual report wouldn't have 3-year history. I want to have a look at 3-year history. I wonder if CommSec, earnings per share, no, they don't have earnings per share growth. I wonder if they have anything in their financials. Let's have a look. Earnings. Yeah, they don't have earnings per share, but you can see earnings here. And earnings, according to CommSec, have grown from 24 cents per share in 2016 to 33. So 24 to 33. So let's do calculator, compound CAG calculator. What was it? 33, 24 over 10 years. 33 over 24, 10 years, 24, 33, period 10. So that CAGR is going to be fairly low. So FinChat calculated it as 4.5%. And let's see what CommSec would have calculated at. 3.2%. So fairly low earnings per share growth over the last 10 years. So we have CommSec and FinChat on the same path. What else do we have here? I used to be able to look at Guru Focus, but I think Guru Focus is limiting to what I can do. Let's have a look. Oh, I can't even do anything here. Maybe I have to log in. No. Screeners, home, maybe home. Oh, no, I don't know. Do I have another one I could look at here? Maybe just AI. Let's have a look at AI. IPH, ASX company, EPS growth, 10 years. Let's, oh, no. I wish AI was, what about Simply Wall Street? That might have something in it. Earnings per share growth, 4.9%. Earnings per share growth, 1.1%. But doesn't have a time period there. I'm going to go back to AI. I want to see if I can get AI to work here. AI. Why does AI sometimes pop up and sometimes it doesn't? I don't know. How do we get AI working here? I just want to know AI. Okay. Now, at least CommSec was on the same line of thought as FinChat, in fact, even lower than FinChat. So I'm just assuming FinChat and CommSec on the right path when it comes to IPH's earnings per share growth over the past 10 years. So I only looked at one period there. That's a 10-year period. Okay, so the Ramones, I wonder if the Ramones likes the Ramones. Or maybe the Ramones is something completely else other than the band. Maybe it's the Ram Ones. It could be the Ram Ones. Maybe this person is a fan of the St. Louis Rams, although it's the LA Rams these days. Anyway, so maybe that's the way it is. Kneppy, in regards to Findi's SPP, wouldn't hold a sellout at $4.20 Just be invited to participate and buy a discount of $4. Cheers. Yeah, keep up the stellar efforts. Enjoy that career break. Your channel in itself is an investment. Maybe I should make you pay. There you go. Anyway, so Findi. I actually did have a look at Findi's SPP. In fact, before I started recording, I had a look at this because I saw the question and went, so they're doing capital raising at $4. Share price has pulled back a fair bit. So I had a look at the capital raising. Here it is. Findi complete, strongly supported. Was it that one I looked at or was it another one? I think it was this one I looked at. Anyway, so there was one problem with this. So if I was a holder, so the capital raising is done at $4. So there's a placement, a pretty big placement. Was it 45 million? No, 40 million placement plus a $5 million share purchase plan. So what the Ramones is saying is if you're a holder, why not just sell out of your holdings right now and then just participate in this SPP at a lower price, which sounds really good, really, really good. But there's one problem with doing that. If we have a look at the SPP, so overall, it's a very small portion of the overall capital raising. And there's one little problem with this. And if we go to the share purchase plan part, the one problem I do have is, see if I can find it, the SPP will be strictly capped at $5 million. So according to that one line, there is no scope to increase the SPP. So if all the shareholders are rushing to sell their shares to buy in with the SPP, there's a chance they won't get their full allotment. In fact, there's a chance their shares could be significantly lowered. And so that is a problem with these sort of capital raisings. Just sometimes you just don't know how much you're going to get. So that is the one problem with this, with that strategy. Is sometimes you just don't know. It is conditional of the SPP that any shareholders who sell any of the shares in Findi during the SPP offer period will not be allocated shares in the SPP. Well, that's another problem. I didn't even read that. Anyway, that's really interesting. I don't know if I like that. I really don't know if I like that. But then again, yeah, there you go. So you can't. Just based off that, you can't. I don't like that at all. In fact, the more I think about that, I just don't like it. Yeah, the first thing, the reason I don't like this is the share purchase plan is way lower, way less opportunity for shareholders to participate in this capital raising because $40 million placement, $5 million share purchase plan, and it's strictly capped. So I'm not the biggest fan of this particular capital raising, but right there with that line, you can't do what you said you could do, the Ramones. There you go. I'm glad I kept reading then because I did not realize they had that in there. And I've never seen that before. I'll be honest with you, I've never seen that before. Finally, actually, this is not fun because I've got those two comments that I've yet to look at, which is from Shamg33 and Sensei 6011. So Blacktop Images, what's your opinion on Highcom? Chart is starting to look interesting. So Highcom, they have armor for soldiers and that sort of thing. And they also, pretty sure they have something to do with drones. So armor and drones. And we have started to see a significant increase in defense spending in United States, in Europe. And you would think that would help Highcom. In fact, that's the place to be investing right now is defense companies, particularly those focused in Europe. And I think there's a reason why Highcom chart is starting to look pretty good. That's one of the reasons. And I'm pretty sure they did release an announcement recently. There we go. New $3 million ballistic product order received. The other thing I should also mention, this company is profitable. It was a one little surprise I did see when the company released, when all companies released their half-year results. I did not expect this company to be profitable. So I should also mention I am a shareholder of this company, by the way. I've been on and off shareholder of this company for about 6 or 7 years. Anyway, they are profitable. I did not expect that. So revenue up 78%, EBITDA 1.9 million, profit of 1.2 million, cash balance of 8.4 million, and the company is not that big. In fact, the company has a market cap, I would say 25 million, maybe a little bit more now. 22 million, no, it's not. It's not that big. So there's not a lot of potential price into this company. So it's a really intriguing company that I've always thought was really cheap, but they did go through some problems 2 years ago because of a CEO not doing his job or something, and the board got rid of that CEO fairly quickly. And I think things have started to rebound. And if you have a look at the chart, it's not like Supply Network, but we started to see a little bit of a shift in sentiment in Highcom. Yeah, there's the shift. In fact, the share price has started to move into an uptrend. So, in fact, I do like this chart. And by the way, the getting rid of the CEO was a year ago, so just over a year ago. That's why the share price dropped 44% on the 13th of February 2024. I do like the chart, and I do like the very fact the company is profitable, which is really good. Okay, so now let's go to those two comments that I've somehow just missed. The first one is from, actually, we'll go to Sensei first. Sensei. In fact, I don't know if I can do oh no, I don't know if I can do the viewer's name. So Sensei. No, I can't. ETFs. Not ETF. No, it was like 3 or 4 days ago. I might just have to do this, which is annoying. And I just have to find Sensei. Here it is. There you go. Sensei 6011. In your total portfolio, quantity-wise, how many of your total holdings are ETFs? 30 total holdings and 40 ETFs will be 13.33%. Now, this is a fairly important question because I've mentioned before that I'm not a big proponent of ETFs personally. And I should mention this. Personally, I prefer to invest in individual companies, but I have invested in ETFs before because of opportunities that I can get from ETFs that I can't get from investing in individual companies. So, for instance, I invested in Asia ETF. I invested in like the Moat ETF, the Bowl ETF in the past. That was to get exposure to USA stocks. But now I've started investing in USA stocks. I don't need that exposure to that area. So that's about it. And otherwise, I don't own any ETFs right now. 0 ETFs right now. But that's my own personal preference. So generally, at most, I own 1 ETFs. But yeah, that's it. No ETFs for me. Now, if someone said to me, look, I'm not a big expert in investing, what would you suggest to me? And I'd say, I cannot give you advice, first of all. But if I had no experience in investing, and if I had a fair bit of money, I would just think about ETFs. That's all I was thinking about. And then I'd start learning about how to invest in individual companies. But going down the ETF route, I think, is really good idea for a lot of investors out there. Just not for me. And Sham GGG. This one's easy because this particular poster requested about a company with the T code GRRR, and I thought it was a joke. Grrr, and it's not a joke. This was actually a comment. I replied to another comment in regards to Chechia. Oh, that's why I missed it. That's why I missed this one, because it was a reply to another comment from Just James Jean. I must have pronounced Chechia as Chechnya, maybe. Anyway, so Sham G33, hey Nep, could you have a look at NASDAQ ticker GRRR upcoming financial year earnings? First thing I did was have a look at the chart, just to see if this was a real company, which sometimes you don't know. It's a real company called Gorilla Technology Group. And then I looked at the chart, I went, whoa, hello chart. Share price has absolutely exploded since late last year. Share price has gone from $4 to $25, so it's a 6-bagger over a fairly short period of time. Share price or the market cap of the company is only $462 million, so it's not a big company. And then I had a look at, this is in FinChat, not FinChat, what do you call this? TradingView. The last 2 quarters, they've been profitable. And I was like, ooh, geez, last 2 quarters they've been profitable. And then what I should do is go to FinChat. Where's GRRR? There it is, Gorilla Technology Group. Provides video intelligence, Internet of Things security, and edge content management hardware software services in the Asia Pacific region. The company operates through 3 segments: video IT, security convergence, and other segments. It offers, there's a fair bit going on here. Anyway, so CEO is Mr. Jayesh Chandan. Year founded, doesn't say. Now, I probably would assume this is not a high-quality company. Gross margin 75%. Pretty nice. So it has a potential just based off that. And no return on equity or return on invested capital, maybe because it hasn't been around too long. Revenue growth only 19.9% over the last 3 years. So we don't have a lot of history here. And P ratio is 11.7. If you have a look at the financial history, they do have quarterly here. I think they do have quarterlies here. Yep, they do have quarterly. So revenue, because this is the United States, we have so revenue all over the place. So one little, yeah, that's interesting. Revenue all over the place, so not consistent. I just want to have a look at net income. And the company has been profitable the last 4 quarters, according to this. So the next thing I'd probably look at, so definitely not high quality. The revenue history, really interesting. Investor relations. So this is something I look at all the time. I just want to see what they're talking about in any sort of release. So this is actually fairly old, according to this. Now, what you could do is Gorilla Technology Group. Just Google, if I can, Gorilla Technology Group. Technology, and go to investor relations. And they will have and should have investor presentations here. So there's an investor presentation. Not all of them do. Looks like the CEO, he's got long hair, looks like, which is not a bad thing. I used to have long hair back in my university days. Anyway, so this is recent, February 2025. They go through their journey. Looks like they developed 24 years old. There you go. So it's a fairly old, 29 patents, global footprint. So I'm not going to go through all this in this video. And there he is. There's Jay Chandan with his long hair. So he could be a cool CEO to work with. So fairly, I was going to say diverse board, because we have Bruce Bauer. It's a very white name. And then we have a lot of Indian names, maybe Namratha Joseph. That sounds like Anglo-Indian, just because Joseph, last name. Gloria Chen, Alan Lowe. So nice, diverse board. And the other reason I say that is because there's a lot of names here I can't pronounce. And we had, what's RT? Honourable Ruth Kelly. That's another very white name. Greg Walker. I was going to say, that's a very another white name, but he's not white. Anyway, I'm not a big, I don't really care about diversity, that sort of thing. When it comes to sexes, races, that sort of thing, it's not that's not the diversity I look for. The diversity I look for is how the board gets along with each other and how differently they think. Conservative or aggressive, that sort of thing. But that is not how people define diversity, which I think is wrong. This is the sort of thing I'm looking for. Long-term track record of robust growth. Interesting way to put it. Significant decrease in revenue 2022. Or is that, no, that is revenue. What happened there? But overall, revenue has been growing at a nice clip, except for 2022. What's happened there? They had the IPO that year. IPO, it's transition year, they called it. Everything's looking nice here. They've got guidance as well. Really nice growth in guidance, EBITDA. Jeez. Fortified financials. I'm going to have a closer look at this company, GRRR, because it does look interesting and the chart looks interesting as well. So I have to thank you for ShamG33 for providing us with an idea. That's all it is. It's an idea. And what you do with that idea is up to you. Okay, that's all I have for this video. All 20 questions and comments. I'm surprised it only took about an hour and 20 minutes. So maybe I should do that many comments and questions in the future. If you have any questions, any comments, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.